Hello, welcome to Invest. We're talking about investing, finance, and professional women. As a recording time of 9:06 a.m. on Eastern Time, Ethereum coin trade $2,498, up about 3.61% so far. On the over crypto market, see clearly on the key coins, Bitcoin and Ethereum are both up approximately about 3% respectively. And on the altcoins side of the house, we are surging, relatively nicely as well. Across the spectrum, I would say on average, about 7.5 to 8% on average right now. And the rebound that we're seeing right now is not really a specific media affectation, but just more of a technical exercise that the market is circulating at the moment, due to the lack thereof on the media front. And when there's as we're chilling cool as a cucumber with lack of negative media affectation, and the technical confirms that we have been oversold, really deep in the bloody water, way below the oversold level in terms of the spectrum that identifies so far. Of the 30 out of 70, we've been depleting all the way down to 22, low 20s even on Bitcoin, which, as we know, a lot of people collectively have sold on a loss, due to panic, uncertainty from just a bunch of last week's negative affectation from ever since the MLK holiday broke out, and then to the Boris Johnson news that broke out as well, and subsequent to that, the Russian crypto ban rumor that came out, to the interest hikes on Thursday and Friday to 1.9% respectively, to the tech earnings missed that we have also seen from Netflix and obviously Peloton on their delay in production. All of these short-term negativity are a good foreshadow of a good positive long-term activity that we should be expecting going forward. All of these, I would say, mixtures of stirs that we're experiencing right now these are just signs of us collectively trying to revive our economy back to the normal cadence back before the COVID, obviously 2.5, 3 years ago, right? So it's definitely not something that is easy to do. Obviously, we are trying to change the world, moving mountains, shaking the grounds to get us back to the normal cadence, right? And when there's a lot of emotions, financial dynamics in play, the market's on the edge, right? And right now, the rebound is, I would say, is this really the bottom that we are forming? I would give that as a relatively high certainty that it is, because of the fact that we are at the all-time low in terms of being oversold. The severity is at a historical low. So people, I would say a lot of people have sold on a loss. And can we sell it further down to even lower than the level that we've been so far? I would say that will take a lot of inertia for us to do so. So the market is on the edge right now, and this is purely being traded on technical support levels rather than fundamental value levels that we have identified. So everything that we're talking about from now on, until we revive back to a normal cadence, would be the technical support, right? And luckily, that's the bread and butter of our exercise that we do on a daily basis. And our job is to triangulate all of the media affectation, right? Look at the risk management levels and understanding how to stitch everything together onto the chart psychologically but quantitatively to formalize our execution, right? So it seems like we're still trending in the right directions. It seems like we are. Nothing is really changing our course of nature in terms of long-term vision. This is just a lot of choppy water that we have to get through. And something that I want to remind you is that the upcoming week, as today is Sunday, obviously, on this upcoming Tuesday and Wednesday, it's going to be a big event, right? And we're going to hear more from the Feds about the economic outlook going forward, right? The quantitative tapering, the interest hikes, the 4 interest hikes that Jerome Powell has laid out for us. What are the timing for those? How are we going to be triangulating going forward? How's the COVID variants been doing, right? And also remember, Joe Biden has deployed $500 million onto COVID AIDS in the US, right, domestically, to be supporting, fighting Omicron heads on, right? So we'll see also another, synopsis from Jerome Powell on how that's triangulating and how's that maneuvering through the job numbers as well, which is the key mandate of the Feds. And also, in addition to that, there will be, a bulk of the earnings season is going to be happening as well. About half of the Dow 30 stocks are reporting earnings next week, right? And that includes companies like Apple, obviously, is a market driver, and Microsoft, right? So, and in addition to that, in the weeks ahead, there will be fourth quarter GDP and some personal consumer expenditure inflation data that's expected to release as well. So collectively, I would say there's about, obviously, one is the big events, the Fed's meeting on Tuesday and Wednesday. So those are two. And then it's the subsequent just earnings season in full swing. And then the other one is with respect to economic data on Q4 GDP and personal consumption expenditure inflation data. Okay, so multiple macro catalysts that should technically drive some stirring to the market. So definitely mentally prepare yourself for it. But do we see us like crashing further, or like are we like in a recession mode right now? I would say it's not confirmatory at the moment. We are really depleted at the moment. So for us to crash even further to below, let's say Ethereum for below 2,000, it will incentivize a lot of people to be selling on a loss. So that will be including yourself. Are you thinking about selling on a loss? That's a question you have to ask yourself. Can you hold on through this volatility, through this choppy water, right? As a captain of the ship, right, like yourself, who's managing your portfolio, when you see this crazy storm, are you just gonna give up the ship and just jump off the ocean and just like give up and let your passengers just like dies and just leave your ship from there? Or are you gonna hold on and try to look into your GPS and navigate through the storm, and eventually you'll come out strong because you believe in the architecture of the ship, you believe in the stability of the ship, that despite how crazy is the storm, right, that with your skills that you have learned so far and your patience and your rigorous diligence, you will be riding this out eventually, and you'll come out and you'll be seeing the bright sky and beautiful weather ahead, and then landing into your island or your destinations that you've been trying to get to, right? So hopefully you understand my analogy. So let's just dive right into a technical analysis. Prospective recording time of 9:14 a.m. on the Eastern time. Ethereum could trade $2,479, about 2.82% so far. Respect to the crypto market, again, we're still relatively green because of the lack of negative media affectation. When there's nothing negative, we are positive technically on the net perspective. And we have bounced off from the 2,255, which is the previous level of the bounce, right? As you can see that when we were there, we were basically somewhere around like the 19s out of 70, which is crazy oversold. This is like the worst we have seen so far. And right now we're rebounding relatively sharply, and we got to all the way to the 540 earlier. And the real level that we need to get to is somewhere around like the 2,620, 2,850, and the 3,150 to be in the optimal area for us to be technically on the oversold level. So this is like bank robbery level that we're at right now. So incurring risk aggressively at the moment will be the logical thing to do, right? I have never seen the RSI go below 20s. Let's just put it that way. So I would say, with the technical speaking the truth, I would say that right now we are basically levitating just above the bottom right now. We're pretty much at the rock bottom, to be honest with you, based on the technicals right now. I really don't see us cracking below 2,000 because that's a big stretch. People say like 1,750. I think it could possibly happen, but it will take a lot of consolidation on a sideways fashion for us to stretch out the MACD and the RSI first, and then for us to sell back down again. But I do not see this like a straight arrow down. But if we are to keep going down, that's correctional territory, right? Which we are trying to lean into. We're kind of like touching it right now. But is that possible? Because if we go there, that's like about what, like 100% correction from the top, right? And that's not the most logical. I think 80% based on historical downsell was the technical Fibonacci levels that we've seen in the past. But I think that's a really big stretch. But if we get there, for those that believe in this long term, I will be a little bit more aggressive. Right? Bitcoin's up about 1.55%, bouncing from the 34, and right now the 35,500 basically, with 23 out of 70, so reversing up. The next level we need to get up to is the 37,500, and then the 40,000 from here. I think right now, it'll be a relatively difficult one for us to get below, let's say 25,000 or even 20,000. That's a really, really big steep drop from here. Again, similar to Ethereum, for us to even get to those levels, right? You need to incentivize a lot of corporate investors and retail investors is selling on a loss. But I think, we have already seen the worst of it, right? Do we see a large dump? We've seen that, consecutively already. And at the same time, we're so depleted at the 19.80 out of 70. So absolutely just people have sold on this huge loss because of panic and uncertainty. So I really don't see that, crashing down further, especially not in the 20. I really do not see 20,000 anytime soon, at least. And respect to Dogecoin, it seems like we will try to show me something again. And then Dogecoin's at the 13.95 right now, reversing up. We bounced from basically when we were at the oversold level of 30 out of 70. We're at the 34 right now. I think anywhere from, again, right, 13.36 to the 12.30 is still better level for us. Cardano bounced up to 111 at the moment. We basically bounced from the 92, go back up to the consolidated level of the 102, which we have identified here. We bounced from there because we were at the 36, so it was like not that overly depleted, but we were relatively depleted at before when we were at the 92, going up to the 119 right now. So at the moment, I would not really touch it because at the 41. So you have much better opportunity elsewhere. Solana is at 100 right now. Right now, it's basically at the comfortable flat number, but not really a real number with the 25 out of 70. We were at the 20 out of 70 because when we were at the 86, right? 86 is basically a very, not the most substantive consolidated level, but we were really oversold at that level. That's why we bounced from there. And 80 is like kind of or 85 is like a flat number as well, and people bought in. Right now with the 100 just cooling away, and I think bouncing up to above to 113, which is the next level of consolidation. I think right now from 113 to below is still good for us to incur risk. XRP, 61 cent at the 57. What's the bounce? 27 out of 70, so not terrible. We bounced from basically at the 22.94, which is when we were at the 55. It's a flat number, but not real number, right? So right now we have a long way to go back up to, firstly, 65, which is the next level of consolidation. Not the very substantive one, but real consolidation level is 69. So we have to get up there for us to continue the momentum on upward swing from here. Polkadot's about 3.58%. Right now it's at 29. So anywhere from current level to the below 16 is still a good level for us. Algorand's up about 10% right now. At the moment right now with the 30 out of 70. So anywhere from current level to anywhere from below, I would say, is full game, right? Anywhere when we oversold is fair game for us to incur risk. Shiba Inu is up about close to 10%. We bounced basically when we were at the low 1700s. Again, this is something that we talked about before. We are at the low 2000s, so the up echelons of we're at the fair level at the moment, but obviously we were getting to the more of attractive level when we're at the lower level on the RSI scale of 26 out of 70. So yeah, anywhere when we are below the threshold of 30 is full game. So obviously we were bleeding further in. to the low 17. So I think whoever got in at that level, that was a very amazing dip for you. MacTags, a lot of activities going on right here. At the 32 out of 70, we obviously got to like below 20 when we're at the 16.8. A huge well dumped this like enormously. So I would probably stay away from this. It seems like we're reversing nicely right now. So we bounce off basically from where we broke through like 1, 2, 3, 4 level. And at the moment with the 160, so just comfortable gliding away at the previous consolidated area. We need to get above 175 to continue the momentum from here. AVAX about 6.53%. Right now it's like bouncing from the 60. Exactly, this is technical exercise right now. We got very depleted to the 50. So at the moment it's a 30 out of 70. So anywhere from the 59.97 to below 250 is still fair game. Luna is at the up 8%. 67, so we're basically reversing up from the 62 level, which we'd identify. So 62, 52, 45 are still logical level for us. So with respect to risk management level, we still stay within the pattern. I've been getting this question asked before, like, the price that we have went down, right? Why is the risk management levels not changed or revised to, to the lower level? That would not technically makes sense, right? Because we are way below oversold. So at the optimal level, anywhere below the steal levels is fair game, basically, for you to be more aggressive in terms of incurring risk, right? Obviously, there's a lot of emotional in play. People are investors are basically on edge right now. So when there is a lot of emotional psychological effect that's going on, people tend to do things that are not the most logical. They sell on a loss. They even sell on a huge loss, even, which subsequently drive the sell-off that we've seen so far. But the technical frames of reference on when was that price level got to the oversold still holds, right? So it will not be logical for me to readjust to the steal level, the attractive level, fair level based on the current state, because the level that we're at right now is already below the oversold level. So for me to shave it even further down, it would completely destroy the fundamental value, right? So we are comparing both fundamental and technical values of these investment vessels. And it's important for us to stay within the frame of logics, right? And these are the logical levels. And right now, the market is not being logical, so we understand that if it's below the steal level, it's logical for us to make sense to take the risk, to capture that margin of separation between the logical frame of reference and the emotional frame of reference that the market is trying to tell us, right? So hopefully this is helpful. Let me know if you have any questions, and hope you guys have a great Sunday as well. Take care. Bye.